This video is to review and summary of third quarter ended the 31st of March, 2020. Sunway Reit financial results. The government had activated movement control order as part of the containment measures since the 18th of March, 2020, putting a halt in many businesses. Bank Negara Malaysia projected the Malaysia's GDP to be flattish or possibly slip into a recession at -2.0% year-over-year in 2020, depending on the severity of the crisis. The Sunway Reit manager expects DPU for fiscal year 2020 to be lower than fiscal year 2019, caused by substantial loss of income for the retail and hotel segments. The utmost priority for Sunway Reit in fiscal year 2020 is cash conservation, cost containment and reprioritizing non-essential capital expenditure. The manager has revised its income distribution payout to at least 90% in FY 2020, payable on a semi-annual basis. This is a preemptive measure to strengthen Sunway Reit's liquidity position to be ahead of the recovery curve and capitalize on any growth opportunities to deliver long-term sustainable growth. The Retail Group Malaysia has revised Malaysia's retail sales from an initial growth projection of 4.6% year-over-year to a contraction of 5.5% year-over-year in 2020. The manager expects the offices in Sunway Reit's portfolio to be stable in FY 2020 in view that these office properties are located in matured integrated township development, transit-oriented developments and established locations. As at the 31st of March, 2020, Sunway Reit owns a portfolio of 17 assets comprising 4 retail malls, 6 hotels, 4 offices, a medical center, an industrial property and an education asset with a combined property value that stood at 8.1 billion ringgit.
Gross revenue for Q3 2020 decreased by 7.1% or 10.7 million ringgit compared to Q3 2019, mainly attributable to lower performance from retail and hotel segment resulted from COVID-19 impact, partially offset by contribution from the newly acquired Sunway University and College campus. Net property income for Q3 2020 was lower by 9.0% or 10.3 million ringgit compared to Q3 2019 in line with the decrease in revenue. Profit before tax for Q3 2020 was lower by 13.4% or 10.1 million ringgit compared to Q3 2019 mainly due to lower NPI.
The retail segment recorded gross revenue of 98.3 million ringgit for the current quarter ended the 31st of March, 2020, a decrease of 11.2% or 12.4 million ringgit compared to the preceding year corresponding quarter, mainly due to 13.8 million ringgit rental support granted to non-essential retail tenants during the MCO period which commenced on the 18th of March, 2020. The net property income correspondingly recorded a reduction of 15.6% or 12.4 million ringgit compared to Q3 2019. The hotel segment recorded gross revenue of 15.3 million ringgit for Q3 2020, a decrease of 34.6% or 8.1 million ringgit from Q3 2019, mainly due to impact of COVID-19 which affected global traveling patterns in Q3 2020 as well as the MCO period affected by government. Cancellations of room bookings and corporate events were inevitable during this period. NPI correspondingly recorded a reduction of 37.0% or 7.9 million ringgit compared to Q3 2019. The office segment recorded gross revenue of 10.7 million ringgit for Q3 2020, an increase of 8.1% compared to Q3 2019, mainly contributed by overall improved performance from all office properties. The NPI recorded an increase of 22.1% compared to Q3 2019 due to vacancy allowance received in Q3 2020 for Sunway Tower, while Menara Sunway had incurred higher maintenance expenses in Q3 2019. The services segment contributed revenue and NPI of 14.9 million ringgit for Q3 2020, an increase of 9.0 million ringgit compared to Q3 2019, mainly due to full income contribution of Sunway University and College Campus for the quarter of 8.7 million ringgit, as well as contribution from Sunway Medical Center of 6.2 million ringgit to revenue and NPI in Q3 2020, an increase of 3.5% compared to Q3 2019 due to rental reversion in accordance with the master lease agreement. Sunway Reit Industrial Shah Alam 1 contributed 1.5 million ringgit to revenue and NPI for Q3 2020, in line with Q3 2019 and in accordance with master lease agreement. Revenue of the portfolio decreased by 7.1% or 10.7 million ringgit due to the performance of all segments as discussed above. Correspondingly, NPI also decreased by 9.0% or 10.3 million ringgit due to the performance of all segments as discussed above. Total return represents the change in unit price from beginning of financial year plus annualized distribution yield for the period ended the 31st of March 2020 decreased of -9.1%. Average annual total return is the sum of the return rates of Sunway Reit over 5 years divided by that number of years is 6.4% for the period ended the 31st of March 2020.
The Jeffrey commented, the COVID-19 pandemic is an unprecedented black swan event which has resulted in major disruption to businesses and affected the livelihood of workers and their families. He further elaborated, during this difficult period, we have strived to support our tenants to our best endeavor to brave through the storm together. At the same time, we have proactively introduced cost containment and capital management measures to strengthen our financial position in case of any contingencies, while building on this robust foundation and to be in the best position to capitalize on any potential growth opportunities which may emerge from this crisis. As such, with the above objectives in mind, the manager has proposed a cash conservation program as part of its capital management strategy in managing Sunway Reit's cash flow. The manager has adjusted the frequency of income distribution from quarterly basis to semi-annual basis, with income distribution of at least 90% of the distributable income of Sunway Reit in each financial year. The Jeffrey added, all in all, we believe that opportunities will still prevail in times of adversity. As such, we are reprioritizing our asset enhancement initiatives while continuing to assess new income-generating strategies in anticipation of post-pandemic recovery in the longer term. After reporting lower earnings in its third quarter, analysts are expecting Sunway Real Estate Investment Trust's fourth quarter to be weaker as it registers a full quarter's impact from the COVID-19 outbreak as well as extended MCO.
The score for Sunway Real Estate Investment last changed from 6 to 5 on the 19th of April, 2020 and has remained the same for 5 weeks. The recent change in the average score was primarily due to a decline in the earnings and price momentum component scores. The chart indicates where analysts predict the stock price will be within the next 12 months, as compared to the current price. Analysts' consensus target price of 1 ringgit 75 sen, with mean target of 1 ringgit 85 sen. High target of 2 ringgit 16 sen, low target of 1 ringgit 48 sen. Thank you for watching this video. Please like and subscribe this channel and we will provide you more update in future.